Hello. Sharma sir, shall I start?
Yes, sir. Good morning, everyone. My heartiest greetings to each one of you of Independence Day. Kukreja sir, have you joined?
Yes, sir, he has joined.
Yes. Sharma sir, good morning. I'm there.
Shall we start, sir?
Sure.
Yes, sir. Yes, madam. Please go ahead.
Namaskar and good morning to everyone connected to this webinar. Respected speaker of today's webinar, Shri Prakash V. Kukreja ji, our chairman, Shri S.P. Sharma sir, esteemed participants and my senior colleagues. I, Sarita Singh, CEO, Divyajyoti Values Foundation, RView, extend a warm welcome to you all in this special continuing education program, which we are conducting as a part of celebration of our Independence Day and Azadi Ka Amrit Mahotsav. My greetings to all of you on the occasion of this national festival. As you are aware that we have won our freedom after a long struggle, so many of freedom fighters made supreme sacrifice of their lives. With respectful homage to them. Now it is our duty to preserve this freedom. On this front, as professional engaged in valuation profession, we can contribute to this cause by doing our duty diligently with sincerity and in an ethical way. By doing so, we will be contributing to the cause of nation building. I feel that all present in this webinar agree to it. Now we move on to the today's webinar. You are aware that topic of today's webinar is preparing a comprehensive valuation report. This webinar is for all asset classes. Rule 8, Sub-Rule 3 of Chapter 1 of Companies Registered Valuers and Valuations Rules 2017 states the fundamental features of a valuation report. Besides these features, valuer can give additional information as per need to make the valuation report a complete document. With knowledge gained from past experiences, all stakeholders have understood the importance of valuation report. Therefore, all care and precautions should be taken to ensure that valuation report contains all required information so as to avoid complications in future. Considering the need of registered valuers who are new entrants and also to offer an opportunity to experienced RVs to refresh their memories, we have selected this topic for this program. We are fortunate that a highly experienced and a qualified professional, Shri Prakash Kukreja ji, is taking this session. Before I hand over the mic to him, I will briefly introduce him to you. Mr. Prakash Kukreja ji is a qualified CA, CMA, IP and RV. Having 19 years of work experience across various industries, his expertise lies in financial planning and analytics and treasury risk domain. He is an ex-banker and his last stint of 10 years was with Citibank as Vice President for Treasury Risk Function. Currently practicing CA, IP and RV in Mumbai and also serving as faculty in couple of RVOs. Sir, over to you for a wonderful learning session of 2 hours.
Thank you so much, Sarita ji. Thanks for opening the session, and thank you, Sharma sir, for providing me this opportunity. So a very warm welcome to everyone. I hope I'm audible, right?
Yes, sir.
Yes,
Okay.
sir. Yes, sir.
So a very warm welcome to everyone on this auspicious day of 15th August, our Independence Day. So undoubtedly we are part of this great nation. And Sarita ji, I think she made a very good opening remarks about how we have so far traveled in the last 75 years. So just on a side note, I'll share this. There is a channel called WION. It's part of ZTV, WION, World is One Nation. And there is a 7.5 to 8 minute video on how India has traveled moved from these 75 years, the 1947 till date. It's a very interesting video. So I would encourage all of you to just have a look at it. It makes you feel very proud that, especially in sectors like health, education, how we have surpassed most of the countries, our neighbors and all that. So it's a great video. So I would strongly suggest all of you to have a look at it. And with that, we will start with the session. So today's topic we have is producing a comprehensive valuation report. And this would be for all the asset classes. So though I'm from SFA, I have tried my best to actually incorporate other asset classes also. And I've kept this topic very generic also so that it is relevant for all of us. And my request would be that wherever possible, like if there is any RV from land and building, plant and machinery, if they want to add their views, experiences, I think that will be great. So it will actually benefit all of us. So please do keep this session interactive, and you can pause me anytime. You can ask questions. So moving on. Now, what I thought is that first trying to understand what could be a comprehensive valuation report. I think it is better first to see what cannot be a comprehensive valuation report. Maybe that might give us some kind of learnings also. So what I've done is I have fetched a report, which is actually for a IBC in Insolvency and Bankruptcy Code and done by an RVSFA. This was done for a CRP, and I have just kept relevant notes of that report without any confidential information, just to give you a perspective that what exactly could have been done better in this report. So with all due respect to the RV, and maybe I'm sure he or she would have tried to do the best, but still there are some aspects which we can carry with us as a learning from this one. Just 1 second. I'm trying to hide the above. I don't know if you guys are able to see the headings, because I am not able to see. I'm just trying to see if I can close that. Just give me 1 minute, please. Okay, does anyone know how can I get rid of the above this thing drop down, where I can open the video, mute? Anybody knows that? Okay, no problem. So let me go to the valuation report. And as I mentioned, this is a sample report. This does not has any confidential information. And what I've done is I've highlighted some of the points. So as I mentioned, this is for a CRP done by a registered valuer for SFA. This is for ABC Private Limited. Now this is how the report starts. And if you see first, they have put the details about who are the registered valuers, then the content of the valuation report.
We can't see the report, sir. We can't see the report. The report is not visible.
Oh, is it? Okay, okay. Sorry. Just give me 1 minute. I'll do. Is it visible now?
Yes, sir.
Okay.
Yes, sir.
Thank you. So,
Sir, excuse me, sir.
Yeah.
Mr. Puneet is also there. He is
Sorry?
a land and building valuer
okay.
and one of the participants. And if you need any queries from land and building, you can ask him.
Definitely. Definitely.
Please quote us.
Sorry, Sarita ji, your voice was not clear. Can I request for his good name, please?
Sir, Mr. Puneet Sethi.
Mr. Puneet Sethi. Okay, okay. Thank you. So I'll request Puneet sir actually to add wherever he wants to add any specific points for land and building. And in one of the slides, I'm covering a specific report format, and which is more prevalent for land and building, which also can be used by plant and machinery and SFA. So we can discuss that also. So this is a valuation report for ABC Private Limited, and this was done during a CRP under IBC by a registered valuer SFA. So this is the first page of the report, which actually gives the content. And if you see in terms of the content, it covers everything, right from introduction, the scope, limiting conditions, background, the purpose, the details about the valuer, disclosure, relevant dates, inspection and investigation done by the valuer. So it is actually very comprehensive and complete. But now let's look at the detail for each and every section of this report. So when I look at the first section, if you see here, it says introduction and scope of the report, right? It does not say introduction of whom. Is it about the corporate data for which we are doing the valuation? Is it about the valuer? So there is no specific title to that. So I might be nitpicking here, but yes, what I'm trying to say is it is very important to be very, very specific. So to share one example, recently in one of the RV groups, I learned that in Mumbai, when there was a hearing which was happening for one of the CRP cases, and one of the honorable judicial member, they actually read the RV report during the hearing, and it actually gave a very bad impression. So the way the way they said is that the RV report is not complete. Okay, it is not specific. It is not giving the details about these asset and the valuations clearly. So what I'm trying to say here is it is very, very important that whenever we are actually preparing a report, the audience is not a resolution professional in this case. In fact, our audience would be much more. It could be COC also at the later date. It would be the Honorable NCLT also at some point of time. So it's very important to keep that in the perspective, and then we prepare the report. And there could be some people who understand how the valuation report looks like. So they would be very conversant with it. But yes, there will be more number of people who will not be conversant. So it's important that you try to highlight each and every aspect in the report. So coming back to this, so if you see here, it is introduction and scope of the report. And the way it is put is that we have been appointed by the RP of ABC Private Limited as an independent valuer, and to determine the fair value and the liquidation value of the corporate data. So though it is understood this for ABC Limited, but it helps to first introduce the corporate data, first introduce the asset. So if it is plant and machinery or land and building, it is important first to talk about the asset, what you're valuing. So here, in this case, as a SFA RV, my suggestion would be that first you introduce the ABC private limited, what exactly they are. And then we can talk about the scope also. Moving on, if you see the scope here, so the scope says, I'll just read out what is highlighted in yellow, because those are important points. So it says financial assets and other applicable provisions, rules made thereunder. Our scope of service is restricted to the services specified in scope of work as other services, including illustrative. So if you see financial assets, right, it is I think we should be very specific with financial assets of ABC Private Limited, right, as a part of CRP. Now, applicable provisions, rule made thereunder. I think it's very important here to give some perspective about, apart from Regulation 35, there are some specific aspects which are mentioned in the IBC code, though I'll not get into much details about that, but it helps the reader to get exactly what the RV is trying to say as far as the scope is concerned. And if you see, the scope basically means purpose, right? Or what exactly the RV would be covering, right? For whom? So this is a very, very important part of the report, and it should be as specific as possible. And if you see here, below it says other services, including illustrative, the following: legal advice, opinion, accounting, taxation matters. So this is very generic. I think here it's important to rather highlight what is the scope rather than listing what is not the scope. And if you see here, reliance would be placed on the information that may be provided by the company. So this is again a very vague statement. So I think we should be very, very conscious and aware about these specific words which we are using in the report. And this will obviously applicable to all of them. I mean, all the asset classes. Moving on, the next is statement of limiting conditions, right? So limiting conditions for whom? Is it for the asset? Is it for the business? And again, this is linked with the scope also. So again, you will see an overlap. So if I just quickly read out, it may be noted that the valuation is a highly subjective exercise, and opinion on valuation may differ from valuer to valuer. Fair point. At the best, it is an expression of opinion or the recommendation based on certain assumptions. And then they are stating what could be the broad assumptions, that valuation does not include auditing. Second point, valuation should not be considered as an opinion on the achievability of financial projections. Fair point. The report is to be considered only for the purpose of determining the fair value and liquidation value of the corporate debtor in accordance with Regulation 35. Now, if you see again, there is a repetition. So again, what they had mentioned about Regulation 35 in the introduction, again, that's a repetition. So we can avoid that. Again, be very, very specific. So I'm just trying to highlight some of the things or mistakes what usually valuation reports have. And just to add one more perspective here is that I have seen in some cases, usually there is a copy paste approach which is being used. तो पुराना report ले लिया, उसमें specific changes कर दिया, and then you just publish a report. So please don't do that. You can take one report as a base, but make sure that you go through each and every aspect of that, the report which you're referring to. And it gives the right perspective about maybe the plant, the machine, the land, building, or any asset, financial asset. So very, very important.
My point is, there is a point.
Sure, please, sir.
Yeah, that once you are saying about limitations, so
Yeah.
basically, like if you talk in terms of management, it is terms of reference.
Correct.
So terms of reference is a very difficult and proper management word. But limitations, when you say, and what was described in first and second paragraph, it is supposed to be in a disclaimer or caveats.
Correct.
That valuation is very, and two valuers will not be same. So that is not
Correct.
required here. Terms of reference is, it should be solid terms of reference in connection with scope or object or aim. So this is wrong, sir. If you see critically, then like education point of view, it is wrong. It should be going in disclaimer. Terms of reference, for example, that if I am doing about some building, so then one can say that only in terms of reference that valuation is to be done only for the superstructure, not for foundation. That becomes limitations. So
yes. Yes, Puneet sir, absolutely. Thank you so much for adding that. And that's exactly the perspective which even I'm trying to bring forward. In fact, there is a separate section which we will cover in the report and in the slides also, that limitation part is so important, and caveats, disclaimer. So that should be highlighted separately. So I'll cover that again in the slide and in this report also. But as you rightly said, it has to be very, very specific, very specific. Now, if you see what I mentioned in the beginning is that first you should provide the information or the background about the asset, right? So either if it is a property, if it is a machine, or if it is a specific company you're looking at and the assets. Now, this is coming at the point number 3. So these are some basic information, which is fair, where the company is located, what is the structure, what is the registration number, and so on. And here, what I saw is there is a statement called all the information considered in report is as per MCA. So usually, maybe somebody, maybe Puneet sir, you can add for land and building, or somebody from plant and machinery can add it. But from a SFA's perspective, what we do is that whenever we get this assignment, we always go to the MCA portal. We revisit all the important documents in terms of the incorporation certificate, balance sheet, what has been already filed. So that gives basically like a corroboratory evidence for us also. And if there's any disconnect, we discuss with the RP, like in this case. So having such a general statement, all information is considered in the report as per MCA. I think it would be more better to specifically highlight, let's say, for example, a balance sheet P&L as of March 2021 was actually looked at MCA, and it was in line with what has been given by the resolution professional and so on. So again, same point, very, very specific, what information we have looked upon, why, and if there is any correction or if there is any assumption, it's very, very important to highlight. So maybe anybody from land and building, plant and machinery wants to share, like how do you check these specific details about the company or the asset? Like in our case, it's MCA. Anybody? Puneet sir?
It is basically like background check. For example, there is some asset, say building is there. So some background is to be given. So then one can always say that estimated construction date is 1962. After that, this was not in use, but then it was revived. So such type of background, if it comes, then it had gone in under some legal dispute. So that will give idea, but now it is clear. So what papers are not available in the say registry or with the government or development authority, say Ghaziabad Development Authority. So title deed is not available, and this complete case is now based on sale deed. So such type of background comes, then it is giving very generalizing thoughts of reader also and valuer also. and it will
Correct.
make some purpose that you are giving right purpose, that earlier it was construction was a brick masonry, but it was modified to in so and so year approximately. One can write that as per like a book study that was modified or converted into steel structure in so and so
Mhm.
year. So
Okay.
then you know that even if valuer is saying something, but the reader knows that earlier it was this was modified.
Correct. Yes.
Actual age and life would be this.
Yes. Yes. Perfect. Perfect. Great. Great. Thank you so much. Anybody from plant and machinery? Okay. So moving
Sir,
on.
sorry to say that even I have done something because people keep approaching me, banks and all. So with common sense knowledge, which is required, even for plant and machinery, I do because I am doctorate
Okay.
in doctorate.
Okay.
So why I'm trying to say that, like one case came to me because I'm doctorate in manufacturing units. So case because people take advice. So in this situation, for example, a car had come, like actual, I'm conveying very simple example. So background is to be checked again.
Absolutely.
That cars, banker, they wanted to do one-time negotiation and close. So I'm giving a live example. So then car came. So then obviously we have to check the registration paper that was owned by one owner, or it had already exchanged hands in two, three owners. So if 2-3 owners have exchanged, so the cost of car goes down. So such type of background, even like I'm giving very simple example, even for machinery, it stands. So just I'm trying to open the mind of participants. We have to look into such type of background.
Great, great. Yes, definitely, definitely. Thank you so much, Mr. Thank you so much.
Prakash sir, I would also like to add a point over here.
Aniket ji, sorry,
Yes.
your voice is not clear. If you can speak a little louder.
Am I audible enough now?
Yeah, better.
Is it
better.
loud enough? Okay.
Yeah, better,
So
better.
when we are talking about the background information of any, I'm a land and building registered valuer, and when we are talking about the background information of any asset, for example, in land and building, I think it's very important that we should always mention that whether the property is demarcated or not, and whether it can be whether it is marketable in the present situation, or was it for how long it is long it was marketable, and what is the possession status of the property. Because when we are talking about insolvency proceedings, many times we will find that the property is under wrongful possession or under adverse, and that is important when we are talking about it.
Very good point, sir. Very good point. Great. Anybody from SFA also wants to share their perspective or maybe whatever experience they have gathered so far? Please do so. Feel free to do.
One thing I'd like to share, this is Sudipta.
Sure.
Thing I'd like to share that the generic statements that all the information regarding the company has been taken from MCA may not be correct on the date of valuation, because in the case of, actually I am an SFA valuer. In case of shareholding change, so you'll have to take that information certified from the management that the shareholding has been changed since the last 31st March.
31st March, and between, I mean, ultimately when you
in between of the this financial
ICD.
Yes.
Yeah,
yes.
Correct.
So you have to verify that information.
Yes.
So this statement may not be it may not be correct.
Exactly. Exactly. Yes. Great. Great. Perfect. Thank you. So next is purpose of valuation and appointing authority. Again, very, very important part. So here, if you would see what is highlighted in the yellow is again a repetition, right? Now, the appointing, this was already part of introduction and the scope. So again, a duplication, but here the purpose has to be very specific. In fact, the introduction should have been in the beginning. And here we could have highlighted that the purpose was ideally as per IBC, we need to determine the fair value and liquidation value, right? A resolution, professional details also could have added more this thing. So again, the same point is coming here that specific points, number one. Second is the right way to put it, right? Covering, if it has to be comprehensive, you have to give all the information here and putting it at the right place also. So if something was to be covered in the beginning, shouldn't be covered in the third or the fourth point. Now, identity of the valuer and any other experts involved in the valuation. Again, if you see a simple name and the registration number has been given over here. I think it will be always better that if you provide some more information as an RV, right? In terms of the experience also, because there is no specific guideline that you have to mention only the registration number. But again, some experience that basically will add the credibility. So if somebody is referring your report, the person knows that, okay, this is an experienced registered valuer. And in case of other experts also, even if you have not used it, so here if you see, the title says any other experts involved, though there were no experts involved, but it is not mentioned clearly. I think it will be very good to specify that there were no other experts involved, and the reason being because it was not a requirement, or maybe we can add some more further justification to that. But again, to be very, very specific, disclosure of valuer interest or conflict. A single simple statement doesn't hold good here, that the valuer has no conflict of interest in the specific CD here, which is ABC Private Limited. But also if there are the assets which you're valuing, do you have interest in that? So again, being very, very specific. Maybe some of the promoters or the directors of that particular corporate data, there might be some relationship that also should get highlighted. If it is not, I think it's very good to specifically mention that. So again, giving absolute specific update about your disclosure or any conflict of interest.
So,
Now this is
one
the
point.
Sure, Puneet sir.
I will not honestly, no, I will not, but where I find that is slightly important to convey, very important, means very important, as I understand, like here we are giving details of valuer, and but in case of LNB, definitely required that for LNB purpose, a representative of company also is supposed to be going with the valuer.
Okay.
So that is very important, because sometimes they try to shy away, or they say that don't put our names.
Achha.
Because valuation is by the valuer identifying that particular property, and so many other activities are based on documents reading also, as well as he conveys, and he is supposed to be there even in photographs. So please, have it included that even company's representative who is accompanying the valuer, his details should also be coming there. That becomes very important.
Okay, very interesting. I wasn't aware about that. At least in SFA, I'm not aware about that practice, but land and building, this is a very good point. Very good point.
Yeah, and this is the practice. I'm not saying that just imaginary or it should be done. It is supposed to be there.
It's a practice.
And they avoid. That's why I'm highlighting. Sometimes company people, if they will find that valuer is not existing, like I had gone for some valuation, they were trying to tell me that I'm very busy. And reasonably senior person should be accompanying you. So because accountability and responsibility goes to him. Not that he was trying to say that I'm very busy, that person, some senior manager or vice president. He was trying to say that you take my driver, he will take you in the car and something. He will. So no, you say that you take out time, otherwise I will tell the bank, or in an appropriate manner. Aim is not to pick up any fight, but convey that no, your presence will make a lot of difference. I need a senior professional like you, so that he also feels happy and you are conveying your point.
Understood. Understood. Great. So this is like you, along with this senior person, you visit the specific land, building, number one. Second, whatever information this person would have shared with you, and that will have some kind of an impact on the valuation also. So you will ensure that this all information is part of the report, correct? Including the name of the person who came along with you. Am I correct?
That's right.
Okay. Oh, great. Great. So next is date of appointment, valuation date, and date of report. Now, we all know that there are usually 3 dates, date of appointment and on date on which you are doing the valuation. So in case of IBC, it is always the insolvency commencement date when we have to do the, on which date we have to do the valuation. The date of report can obviously be later than that. Now, if you see here, the RV was appointed on 6th of July, 2021, right? And his valuation date and date of report is 27th September 2021. So again, there is a big gap that could have been justified. Why? Usually I have seen that the registered valuer takes around 2 to 3 weeks max to give the report. That is what my experience has been, and that's what we also practice. In fact, max to max 2 weeks, in worst case scenario 3 weeks. So this is again a very longer period. Number one, that should be justified. Second, sorry. So in case of valuation, date and date of report cannot be same. rare situations, it's maybe same, but at least in case of IBC, I don't think it could be same because valuation date will be your insolvency commencement date in this case. So this is a big mistake in this report. So we as RVs, we need to be very cautious and careful about this part, that we specifically mention which dates, what are these different dates. And if there is any delay, we should highlight that also. So this is very important because ultimately, whenever you're valuing, the report will be considered for that specific date, right? In your conclusion also, even if I'm valuing. Yeah, sure.
We are.
There is an echo which I can hear, sir, but you can try again. Maybe have you logged in from two different systems? Sometimes there is an echo because of that.
Hello, Prakash sir. I have a query.
Sure.
Sir, as you said that a valuation date should be the date of insolvency commencement. Sometimes the insolvency process starts today and the valuer is appointed 2 or 3 months down the line.
Correct.
Is it fruitful to mention over here that as an assumption that we have considered the same set, we have visited the site on, let's say, 3 months down the line in this November or December, and we have considered the site condition was same on the date of insolvency commencement, or no further deterioration has happened or something like that? Should we say these things in our report?
Yes, very important point. So I think I'll just answer your query in two parts. One is, as far as the date is concerned, what you said is absolutely right, because usually an IP appoints an RV between the 40th and the 50th day, right? Usually in this date range,
Yes.
unless if there is any, that is one part. And IP, RP, IP, one and the same thing. So he is or she is supposed to give all the information to the RV here in terms of as of ICD, which is an insolvency commencement date, in terms of the balance sheet and all details. Now, between those two dates, obviously, for example, if there is an inventory also involved, so you have to visit that place. Now, let's say, for example, the date is 31st of July, right? And now if you're going today, maybe there might be some change. So that information has to get incorporated in the report. That as of 31st July, as per the balance sheet provided by the IP, this is what I can see as an inventory. But after my visit, because ultimately you have to do a physical check in case of inventory. So you have to mention this very specific. In some cases, like if I talk about SFA, the difference between these two dates, if there is any kind of a change, maybe in kind of a debtor's aging inventory example, which I mentioned, or any other asset, you have to specifically highlight that. And also you have to collect all the evidence from the IP also. I hope that answers your question, Aniketji.
Actually, my question was pertaining to land and building. Yes, it answers my question in the part of plant and building and inventory questions. But when we are talking about land and building, I was looking at the from the point of view adverse possession or certain dilapidations or certain unauthorized construction or all those things. Because when you talk about land and building, on the date of insolvency commencement, maybe the factory was running, or maybe something happening, or someone was living over it. But but since they declared themselves bankrupt, and the insolvency process has started, so they might stop doing the work, and the factory will deteriorate, or the asset deteriorate in its quality. What we will see and what we will value will be different. For example, as you said, 31st July is the date of ICD. And let's say we go on 15th August today. So in 15 days, if it's a toxic environment wherein the factory uses a lot of chemicals and toxins, and it's close to the last 15-20 days, or let's say 2 months, 3 months, the depreciation will be quite fast. So how will we manage this kind of depreciation or this kind of dilapidation in the structures?
May I come in, sir? May I come in, sir?
Sure.
Actually, we value the properties on as is, where is basis on the date of inspection. Because we don't take into consideration what it had been. We just inspect and see what is there. That is as is, where is basis, and we submit the report accordingly.
So this is, you're saying specifically for land and building, correct?
Yes,
Correct.
as is
Am I
higher is
audible, sir?
basis.
Am I audible, sir?
Yeah, maybe I think we can just allow Subirji to complete and then you can come, please, if you don't mind. Yeah, Subirji, maybe you can finish first.
Yes, we value it as is higher is basis. Because what we see, and we don't go back and see and try to find out what was there and what is there in deterioration or whatever we value is what we see. That is as is higher is basis on the date of inspection. That is my perception.
Correct.
Exactly my point, sir. I completely agree with Subir, sir. That's why I asked the question. So how can we value it on the date of insolvency commencement?
I think here, though I am coming from a SFA background, so that is why from a SFA perspective, we will always look at the balance sheet, right? As of ICD, number one. Then if I'm doing a valuation on 15th of August, obviously I'll consider if there's any change between these 2 dates, but ultimately as of that specific date, I need to consider my balance sheet and I have to just give a report that as of 15th of August and between, let's say, 31st July, this is the changes, how it has happened. Could be inventory, could be any specific financial asset. And hence, this is what my report is as of today. That is how we will have to put it.
Sorry, I'm interrupting. But how do we make sure? How do we know whether there is any change? Like suppose we are saying even a gap of 1 month is there, I accept it. But how are we sure that there was something went wrong with the bidding? We cannot be sure of it because we didn't see it earlier also. We didn't see it. Number one. Anyhow, that's okay. But generally in our appointment, date of valuation is generally given. That as on date, you have to be particular about that valuation on that particular date. Our inspection definitely would be much later.
Correct. So, Nan sir, I mean, I'll just clarify one point here. You made a very good point. We will not be able to tell what exactly was the status 1 month ago, but what happens is, as an insolvency professional, the person, once he's appointed, he has the responsibility to take over all the assets, right? The assets should be in his custody. Now, maybe when we visit, if there is a change, this discussion should happen between the RV and the IP. Okay, this is my understanding. And if there is any change which IP is aware about it, it should get incorporated in the report. So if I talk about maybe land and building and plant and machinery, I don't have a specific practical experience in that. But as an example, I can just say that I think Anikeji was talking about that there is some kind of a toxic, maybe the plant and machinery has changed in last 1 month, 15 days. Maybe if IP is able to provide some information and that is going to impact your valuation, this should get incorporated. This is my view.
Actually, it should be as is higher is basis.
Correct. But as of date, when you are doing it, you whatever you see, you will value it. But again,
Yes.
it is always important to consider that timeline. This is what I have been doing, right? So the difference between these 2 dates, ultimately, see, insolvency commencement date is the date which is like a threshold. Basis that you will arrive at the details, the report, the valuation. And if you are providing the information after 1 month, there has to be some change in that, which should get incorporated. So when you're valuing it, you will obviously ensure that, as you said, as is, where is basis. But if the basis ICD, this is what my books are showing, but this is what it is right now. So this is a change and this is my value.
Because in some, sorry, sir, because in some cases, we visited some structures which had been actually dismantled or got storm stuck or like that. So actually, we didn't consider all those valuations, what it had been.
Okay, no problem. I think maybe what I'll do is once we go ahead, there is a specific case about inventory also. So maybe some of our points might get clarified over there. We can continue with this.
Can't we mention that we have inspected on so and so, we assume the building is same and land and building, there is no change anticipated, something like that?
We can and we have to. In fact, maybe I'll just jump to that part. Let me go here. If you see in this case, sorry, Yes, Suresh sir.
So how can you get the balance sheet as on the date of commencement of CRP?
Suresh, I'm so sorry, I'm not able to hear you. If you can speak a little louder, please.
How can we get the balance sheet on the date of CRP? How can we get the balance sheet as on the date of CRP?
How can we get what?
The balance sheet of the financials. The financials
No.
from MCSI on the date of CRP.
Oh, that is the responsibility of the insolvency professional.
They will give you the last year balance sheet.
Sorry?
On that particular date. What are the factors? How can you get to know? How can you get to know?
No, that is what the IP will do, right? Ultimately, whenever IP takes over on a specific ICD, right? He has to ensure that he has all the updated information, right? What was the overall status in terms of the financials in the balance sheet?
Is it practicable to get the balance sheet done in 47 days and provide to the valuer?
If he doesn't has, like it happened in one of our case also. So we were doing a valuation as of April 2022 for CIP, which was somewhere in Jan 2022. The IP had information about till 31st March 2021. Now there were 8 to 9 months. It was a factory and it was closed, right? So what we did is we asked the IP that we would need your updated balance sheet as of this ICD. So he of course he was also he had a lot of limitations. So he interacted with this person who was
the luxury of time.
Sorry sir, your voice is not very clear. Hello?
Can you have the luxury of time?
Luxury of time?
Yeah. How can you get so much of time? To get in 47 days, you have to acquire the company. You have to take custody. You have to get the balance sheet done. Is it not possible?
So sir, are you an IP if I'm not wrong? I think you are an IP.
Yeah.
So sir, I'm sure you would have definitely some experience of CRP.
Yeah. I used to take the balance sheet of last year in the management presentation.
That's exactly the point which I was coming to. 31st March 2021 was the balance sheet. The CRP date was Jan 2022, right? In between this 8 to 9 months, and then we took a statement from the management that what are the changes which have happened so far, right? In terms of the specific assets, if there's any change in ownership or whatever. So once we have that information, along with the balance sheet of March 2021 and this information, we did the valuation.
Right.
So that is a practical aspect of it. But if I have to tell you, as per the law, IP has to provide this information. Of course, there are some inherent limitations. Even I am an IP, so even I have seen these things. But as I agree to your point. But practically, somewhere we'll have to do a workaround where we have to take this information from the management or the accountant. In fact, in one of the cases, we also saw that IP appointed accountants. Okay, so they completed the books of account. Okay, and on a specific ICD. In fact, we got it audited also. Of course, you might argue that with such a limited time period, how we can do it. But sir,
47 days.
We have to do it, sir. I really don't have any say on that, how we can do it. But this is something which we have to, and that is why, sorry, I'm digressing, but that is where I think IBVR is looking at IPEs and IPs, right? And this is a important discussion paper where they are changing the dynamics of having IPEs and IP, or IPE can act as an IP also, because you have the entire infrastructure in place, you have the team in place. So you are absolutely right. I agree to you, but I think somewhere we have to manage that if whatever we can.
So what did you say? IPEs? What is IPE? Insolvency Professional? What is
entity, IPE, Insolvency Professional Entity. Basically, it is like a partnership firm or maybe a LLP or maybe
okay, not individual firm.
No. So right now, Yeah,
Understood.
so right now IPEs cannot act as an IP. They can only support the IP, but now what they are doing is they are saying IPE can also act as an IP.
Okay, okay.
So I'm sure that will get.
Sir, am I audible?
Yes, Asim sir, please go ahead.
No, my point is, suppose it is not available after repeated chasing the IP. So should I stop or should I wait for that that balance sheet on CRP date?
No, whatever information you have available after, again, I have faced this situation, multiple follow-ups, 3 to 4 follow-ups, and then we put a disclaimer because this information is not available. And as per the balance sheet, as per our physical visit, this is our valuation. That's all.
Right.
Yeah. You can't wait endlessly. So going back to, I think somebody was talking about that, like, I just want to give an example about inventory. So if you see here, let me just go back over here. When we talk about the specific, just give me 1 minute. Yeah. If you see here, this talks about nature and sources of the information used and relied upon, right? Financial statement of 18 Feb 2021. I think this is the ICD. Audited financial statement of 1920. Obviously, between that, there is no list of debtors with aging, list of inventory available, and some industrial information. So if I have to look at specific assets, which is not mentioned over here, it should actually get added. What we do is we actually, over here, we put a summary of the balance sheet provided by the IP. So that gives a very clear picture about what are the assets which we as an RV need to value. So here it says debtors and inventory, correct? 2 assets are there. Now, if you look at the valuation, sorry, I'm jumping this so that it's more important that we are on the same page as far as the approach is concerned. It says that the inventory, this is the book value, this is the fair value, this is the liquidation value. Okay. Can I request, I mean, whoever is not talking, if they can put their line on mute, please. So if you see, there is no mention about debtors over here, right? Even if maybe the debtors are 0, if there is some follow which IP has done, that specific should come out, right? Subir sir, can I request if you can put your line on mute?
I have already put it on mute.
You wanted to say something, Subir sir? Okay. Here, what I'm trying to say is it's very important to give that perspective which assets you are valuing. Now, in case of land and building, obviously, if the land is located at different places, there are different machineries, all of them should be listed here. Even if you have to value them as 0 with a justification, those all things should come out very specifically.
So I've got a query here.
Sure, sir.
How do you arrive fair value and liquidation value for stocks, inventories?
Sir, that is a point which I'm going to highlight over here, that there is no justification given how you arrived at a liquidation value, right? Now, in this case, Suresh sir, I'm very sorry, but your voice is not clear. It's very, very low. I might miss.
Difference.
Hello?
5 lakh difference, more than 5 lakh difference in the fair value and liquidation value.
It's a 5 lakh difference between the fair value and the liquidation value, correct? I will not get into numbers, Suresh sir, because here we are talking about the report. So I'll not get into specific details. Otherwise, we will drift from the topic. So the point here is that even if you arrive at a liquidation value with some justification, there is a reduction by 5 lakh, it should be specified. Now here, if you see, the RV has not specified at all. In the schedule, inventory from 13 lakhs go to 8 lakhs. The fair value calculation is 15.65% on the book value, and the liquidation value is calculated 62% of the fair value. Now, these percentage do not have any sanctity. They do not have any background. They do not have any assumptions. This is not acceptable. Because ultimately, if you are going to give this number, it is RV who is responsible to justify how did you arrive at that. Now here, if I go back, he has, 1 second, I don't see, or just give me 1 minute. There are some photos which the RV had updated. Yeah, if you see here, as I mentioned that the registered valuer visited the plant and it is a iron and steel manufacturing company, right? On the day of the plant, if you see here, he has put 2 to 3 photos. Now, it is very important to highlight that if you're saying liquidation value is only 8 lakhs out of 60 lakhs, which is the book value, sorry, 84 lakhs, which means you have to say this is all scrap, right? I'm making an assumption here. So if this is scrap, then how did you arrive at 8 lakhs? If this person, maybe he has appointed some technical person who said this will be only available, he will be only ready to buy at 8 lakhs, right? Maybe what is the weight of this? That is also very important. So these all things are very, very important to be highlighted in the report. I hope Suresh sir, does that answer your question?
Yes, sir. Yes, sir. Absolutely.
Okay. Now here I have highlighted this in red circle because there is an instance which I came to know that somebody from NCLT had actually approached NCLT or some government authority. They had approached that we want to prove that the RV was there when the inventory valuation was done. So now the practice, what I'm seeing is RV is taking selfies along with the inventory valuation. So again, that is also important. So you are present over there. Number one. Second, whenever you take a picture of this inventory valuation, it is always a very good practice to have the date stamped in your photos, which will always help you as an evidence that one, you were present on this date, and also along with the selfie that you were there. Number two. Third, also always keep your travel related documents. Maybe you traveled by flight or train or whatever. Always keep that evidence handy because you might have to prove that in future, maybe. Okay. So this is very, very important. So please keep a note of that. Now, going back to some of the...
Can I just add something there?
Yeah, sure, Puneet sir, please go ahead.
This is a word of caution or advice that I would like to give to all those who are involved in valuation. Whenever you are pasting pictures in a Word document, please do not distort the pictures like what has been done in this report. All the pictures have been expanded in horizontal format and they've become elongated. So which basically destroys the proportion of whatever is being put in the picture. So whenever you have to enlarge the picture, please enlarge it from the bottom or the top right corner or the top left corner diagonally so that the proportion of the picture, the horizontal and the vertical width ratio remains the same. So this is a distorted picture, which will always give a incorrect perception to the reader.
Okay, great. Thank you, Puneet sir. So moving on, I'll just quickly cover. I can hear some music actually. I don't know who's, if I can request, is it? Okay, thank you. So going back, yeah, we discussed about the dates, inspection. Now here, see how, again, it is very important that whenever you're doing a valuation, whatever information you have received, of course, it is not your responsibility that information is correct or not correct. It's not your responsibility. You have to rely on the management, which is a disclaimer which you always give. But you cannot put statements like we have not carried out any validation procedure or due diligence with respect to the information provided, extracted to carry out the verification of the asset. I don't appreciate this statement. There has to be some sanity check. If not, at least there would be some discussion with an RP in this case. Of course, if you have any, for example, in one of the evaluations which we are doing for a CRP, there was an insurance policy. We went to the extent to get the policy documents. We also tried to understand some of the specific clauses of that policy. And we have an entire mail chain between the RV and the RP. This is what we have discussed. So that as an evidence, I'm going to ensure that when I'm going to give a value of that specific insurance policy, which was covered in my assets, so that also gets highlighted that based on information shared by the, so I have taken some efforts to do some kind of a due diligence. So it is very, very important that you mention that. Now, nature of sources of information. If you see here, it has just put what all documents or information that, but who has provided, right? Other information, if you have source anything from publicly available or maybe from internet, again, very specific. For example, if you have used Bloomberg, right? Or maybe Money Control, or any other websites. Very important to mention that, and what information you have used it. I might go a little fast because there's a lot to cover. So you can stop me wherever you think that you need to discuss or have some clarification. Now, another important aspect, procedures adopted in carrying out the valuation standards, right? It should be understood that the valuation of the company of its assets is inherently imprecise and subject to certain uncertainties. Maybe this statement could have been better. We have made numerous assumptions. Now, if you say numerous assumptions, you have to highlight those assumptions. But when you go to the assumption section, you would not see that. Okay. So again, there is a conflict or a disconnect. Now, there are different approaches. Of course, the RV has put all the approaches over here. Fair point. But now see, market approach does not have any equity share listed in recognized stock exchange in India and has not been adopted. Okay, well, fair point. Comparable companies. There is no such listed comparable company having similar structure, business size. In case of CRP, I may agree to this point to some extent, but if it is steel and iron manufacturing company, I'm sure in India we have a lot of steel and iron manufacturing company. There will be some comparable companies, but it doesn't mean that you have to consider, but always you can justify that you shortlisted 1, 2, 3, 4 companies. But because there is a change or maybe a mismatch in the structure, capital structure, the scale, maybe the kind of products. So hence we could not. So again, being very, very specific about what you have done and why you couldn't consider this specific method from market approach. Comparable companies transaction method, right? Background, we have not adopted the CCM approach for this purpose. Now, for this background, again, a very generic statement. Income approach. The company is under insolvency and bankruptcy code, and hence this method is not adopted. I don't think this is the right statement. Maybe we can justify the company is not under is a going concern. And as of now, as per the discussion with the IP, it doesn't seems to be a going concern at this point of time. And hence, IP did not provide any kind of a discounted cash flows for the forecasted period. And hence, this specific approach has not been considered. So this is how we can justify, rather than just saying that because it is IBC, we cannot use DCF. Hello?
Hello.
Somebody was, yes?
Sir, good afternoon. Sanket this side.
Sanket ji, yes, please tell me.
Sir, just wanted to understand one thing that see, there are different kind of purposes for which we are issuing the report.
Yeah.
So many a times it happens that when we draw any report, so due to first time or due to not getting any reference report or something like that, so some point might be skipped. So how we can cope from those things, like whether we should first send the report to the RVO so that RVO committee member or RVO expert can check and can validate the things, because if the report is used anywhere in the future for any purpose, then definitely there will be chances that if some point might have skipped, so the RV can be in the trouble. So how we can able to cope up from that or come out from that situation?
Okay. So my view here would be that usually this is a practice which we also do it. So if you are, once you are done with the report, first thing you will have a draft report ready. You should first share this draft report with your appointing authority, right? Now, coming back to your point about RVO, I'm pretty sure nobody will take responsibility for your reports, Sanket sir. And
So, sir,
I
that,
don't.
That management, see, management is the board of directors.
Yeah.
And also definitely we used to share the draft report once. Is it
Correct.
practice? Either they understand or not.
Yes.
Okay. So that is separate thing. But I when I do the valuation, I used to share the reports with the management.
Okay.
But again, in compared to report drawing or report preparations, we are the expert, and management is just only concerned with the value. Okay, so
Yes.
they are not concerned with all those things like caveats and all.
Okay, you're
So
referring to that. Okay, okay, understood.
so
Yeah, please go ahead.
Yeah, so if there should be any like committee should be formed or some expert panel should be formed so that these kind of things can be reduced because you never know that where the report are being used. So the quality of the RV and the quality of the services can also be improved.
Well, it's a good suggestion. This definitely can be shared with IBBI and RVOs. And my view here would be that maybe there could be some kind of a standard approach. So right now, if you look at international valuation standards or maybe companies rule number 8, it only tells you what all reports should have. Very broad idea, some of the headings. But maybe as a standard, there could be some, maybe IBBI can take this initiative or our views. We can have a specific, like, for example, if you're doing a valuation during a CRP, land and building SFA, maybe you're doing a valuation for ESOP, right? Or maybe you're doing a simple business valuation, which is part of the M&A, okay? Or maybe an IPO. There could be some standard format with the specific things which we can do. This is one suggestion which I would have. Second, being an RV, my suggestion would be that we should be very thorough with what exactly is the purpose of the report. Second, who is going to use the report. If these two basics are very, very clear, then accordingly you have to ensure that within the ambit of this law, whatever, maybe you're doing a report as part of FEMA, or maybe you're doing a report as per Companies Act or IBC, you are ensuring that within that ambit of the law, you are covering all the aspects, right? And also very important, you should have your documentation in place. Okay, so every assumption, every specific statement which you're putting with it, you should have some kind of evidence in place. This is my view, Sanketji. I'm not sure if I was able to answer. Can I finish if you don't mind?
Yes, yes.
Yeah. So Sanketji, this is my view.
Sir, I want to point here. So what is the asset approach? Is it cost approach? So what is the asset approach? Is it cost approach?
Yes.
Because there are only three approaches: market, income, and cost.
Yeah.
But you are using the word asset approach.
Okay. So it's used synonymously.
Okay.
Yeah.
Prakash, may I add one thing?
Oh, yes, Yogesh sir. Thank you, sir. Thank you. Please add.
I will supplement you. Actually, you were talking about that suggested valuation report. So, Institute of Charter Accountants of India, means RVO attached to that, they have already published that suggested valuation report under IBC. Actually, it is in public domain.
Okay. Great. That's good. But I think Sanket's question was very generic, Yogesh sir, not specific to IBC, but thanks you added that. But yes, so I think maybe Sanketji, was it helpful? You have anything?
Yes, sir, definitely. Actually, like recently I was doing a company's valuation and they are just building the metaverse platform.
Okay.
And in which, they will use NFTs and all.
Correct.
So, like, that is very unique industry, still growing.
Yes.
Never know what is the future of that industry. The company is getting the funds and all. So there are some places where I also have to rethink that what I need to add and what I not need to add, because it's a highly unregulated industry and government of India is also not having any laws on metaverse and all. So like there should be a expert committee, wherein I think within your RVO where you are registered, so that you can share the report before signing or before finalization, so that there should be no back and forth after issuing of the report.
Understood. Sanketji, I'll just add 2 points to this. I hope you're done. I mean, you were saying something?
Yes.
Okay. I'll just add to 2 points. I think what I understand from your assignment, this looks to be a startup valuation, number one.
Yes.
Right? So you have to ensure that you use the right approach. I'm sure you're already aware about the different approaches in the startup valuation. Second thing you mentioned about NFT, and then you said metaverse. These all are intangible assets. Of course, the assets which are owned by the specific startup for which you're doing the valuation. One. Second, these assets are going to give future economic benefits. So my suggestion to you here would be, there not be any kind of a regulation for how to do this specific valuation, but you can always refer to intangible assets international valuation standards. That will definitely give you some perspective about how do you need to value them. And whenever you're doing valuation, you can always say, as a startup, this is the asset I'm valuing, and hence you have used the intangible asset valuation. Because even I had one experience on the similar lines. Of course, we had to reject the assignment due to some regulatory or technical issues, which is fair. But I was also referring to the intangible assets valuation standards. And I was at that time valuing a portal actually. Okay.
I had one point, like sharing of the report, you were saying it is supposed to be confidential. How can we share it with the IP as a draft report?
Sir, it's a market practice.
Okay.
So what we do is usually once we are done with it, and also the engagement letter, this has a specific, that's what we follow. For example, if once you are appointed as an IP, if the fees is, let's say, for example, 10,000 or let's say 20,000, right? Now in that, we say that once the appointment gets confirmed, you can ask for an advance. Again, it depends on case to case basis. And then after the draft report is being shared, there is some part of the feed which is get delivered. And then the final report. Because usually what happens is, like if you remember the example which I gave, there was a specific insurance policy attached to an asset which we are doing a valuation during CRP. Now, basis whatever information shared by IP, whatever documents, the policy which we referred, then we arrived at the asset value. Now, there are a lot of caveats which we had put in that specific report. So we had to ensure that IP and we are on the same page, because this is what the information IP has shared. And it has happened in some situations. The moment you share the draft report, the IP might see that, okay, I have further some more thing to add, some other information to add. Then you would see your report might get a little more improvised. So that is why it's a healthy practice to share the draft report only with the person who is appointed, only with the person who has a right to see that report. I hope that answers your question, Nan sir.
No, sir. No, sir. But there was a case, even some valuer has been arrested because I got in the group. He had shared the report, and because that report went into the hands of too many people, and he was arrested.
So I will just say one thing over here. If he is the end user, why can't you give the draft report?
Here it would be the appointing authority. That's what I'm saying.
Yeah.
Not end user can be multiples. Like if it is a RV report during a CRP, ultimately you will give this report to the RP. But eventually this report will be used by COC, this report will be used by NCLT. But if I'm talking about the draft report, it is the appointing authority. And going back to Nan sir, sir, I'm not very sure about that specific situation or which you're referring to. But I know one case which has recently happened in North India.
Sir.
Where the valuation report was shared, and it was a housing project.
Right.
And resolution professional, by mistake, there was a authorized representative who had privy to this report. He eventually shared this report with all the COC members who were actually the flat owners, and that report got spread. Right. I don't know if it's the same situation, but here.
That's right. That's what.
That's the one which you're referring to.
Yes, sir.
But sir, I think that would be the final report. My point here was a draft report. So I hope you are getting the difference.
Right, sir. Agreed.
Yeah.
Sir. Right. Thank you, sir.
No problem. No problem. Okay. So moving on, asset approach. Again, if you see here, it says not meeting the going concern criteria. So these statements are very, very vague. So my point here, which I'm trying to convey, is that which we have to be very specific. I'll quickly close this, finish this part, because now if you see valuation summary, as I mentioned, data is not mentioned over here. There is no logic about what is the percentage, how the RV has arrived at the percentage. So this will not hold good. We discuss about the photographs also, and Puneet sir shared his view. Yeah, conclusion. This is the summary, right? No mention about other assets. Now this is a very important part, caveats, limitation, disclaimer. But somewhere, if you see here, the responsibility of the forecast of the assumptions, now there was no forecast which was provided. So what is the need for this caveat? So again, copy paste is not the right approach. Even if you're referring a report, fair enough. But please ensure that you look at each and every word, right? No mention about the forecast, this we discussed. This is again a simple declaration. So this was my sharing of a report which is like a below par, and hence I think we should ensure that we do not continue with these mistakes. We should ensure that we be very, very specific, cover all the points which are mentioned as per the act. Yeah,
the kind of views we are getting, the kind of views you are getting, we don't want to be creative in every assignments.
Sorry, Suresh, sir. Can you come again, please? The kind of
fees, the kind of fees you are
fees.
offered. Yeah.
Sir, I'll just tell you one point. Fees is one part, but your profession is at stake. I'm sure you understand that. So I completely sympathize with you because I'm in the same boat. But as far as your work is concerned, you have to do every possible due diligence.
You are creative. You are creative. I am creative. We can do creative work, but provided we are paid off.
I agree, sir. I agree. Okay. Now, quickly moving on to what could be a good valuation report. So far we're looking at what should not be a good, what is not a good valuation report. Let's look at a good valuation report. So here I'm referring to EVS. EVS stands for European Valuation Standards. And during my COP session, I'm sorry, I'm not able to recollect his good name. So he was the one who introduced this, and this is Blue Book. I'm thankful to him. And this is very specific to land and building. So I'll just share that with you. It is such a beautifully crafted the format. I hope my screen is visible. Is my screen visible?
Yes, sir, visible.
Yes.
Okay.
Yes.
Thank you. So here, if you see, there is a report format or like a sample, how the report should look like. This is part one, basic elements of the instruction, right? The property. Now, this is a more of a land and building format, but this can definitely be used by SFA and plant and machinery also. But the idea is that the way it is structured, it is so easy to read, so easy to follow. And it gives a very good impression about the valuation report also. So first part, if you see the property, right? It could be your company, it could be a specific asset, could be land, building, machine, the address, then the land registered reference and identification on the map. So very nice. Then the client, right? So specifically the appointing authority, or maybe here in case could be a corporate debtor, how the client instructed the valuer, any modification since date of instruction. I think we had a long discussion on this. So this is a very, very important point which we should look into. Third party reliance. We discuss about the expert or maybe any other reference point we have in the air while doing the valuation. Limitations on report, confidential clauses, very obvious. The valuer. Now this talks about the valuer. Identification of the valuer. Qualifications of the valuer, status of the independent valuer, external, internal. This may be specific to asset class, but what I understand, it's a valuer has to always be independent. Confirmation that the valuer has the experience and market knowledge necessary to value property. Now, I know as far as our approach in India is concerned, I don't think we mentioned this. I haven't seen this, but I really appreciated this point where they look at what is the experience and market knowledge a value has. That definitely adds the credibility of your report, right? Once whoever is looking at the report, if they look at the experience or the background of the value, this definitely adds to it. Confirmation that there is no conflict of interest. Now, conflict of interest could be maybe for the asset or maybe for the specific company. Very, very important to be added. Use of specialist valuers or advisors, right? Again, that should be highlighted. Scope of work. Again, the purpose gets defined over here. The purpose of the valuation, mortgage, loan, other banking use, could be taxation. Basis of the value instructed, including the full relevant EVS definition, market value. So I'm sure maybe Puneet sir or others can highlight as far as when you do the land and building or a P&M valuation, as far as the market value is concerned, you always look at the market value, right? I mean, as a basis. Am I correct? The current value, as is where is basis, the market value. Is my understanding correct? Anybody? Okay.
The fair market value.
Fair market value. The next is legal interest in the property being valued, right? Basically, whether it's a freehold land, outright ownership, special assumptions are being made. So the whatever assumptions valuer is going to make, any specific assumption, any special assumption, that should also be highlighted as a scope of work, investigation carried out. Now, available information, information received and examined, sources of measurement data, measurement standards used. In our case, it could be international valuation standards. Specifically, if I talk about CRP, IBC, it's very specific that we have to look at the international valuation standards. Yes, Gaur sir, you're trying to say something?
No, sir.
Okay. Valuers must state any important assumption made as regards documents or information not made available to them. Obviously, if there is something which is important, there is an assumption and the documents are not available, it has to be mentioned specifically. Reliance on information obtained from the client and from third parties, which I mentioned in the previous one, that if you're referring money control, maybe Google or any such website, you should specifically mention that. Inspection, scope of inspection being carried out. If it is inventory, I'm sure plant and building, plant and machinery, land and building has to be physical inspection. But as far as SFA is concerned, not all asset classes will have a physical inspection except the inventory part. So the scope of inspection is very, very important. Date of inspection, we discussed. Confirmation that inspection was made by the valuer or suitably qualified person. And coming back to Puneet sir's point, where for land and building, you need one of the representatives, a senior representative from the bank or the appointing authority. Name and qualification of the person who physically inspected the property. Responsibility for the inspection. Extent of the property that was possible to inspect. Description, the location. Now more about that specific property and surroundings, right? Location, then the property, site analysis, description of the physical characteristics of the property, architecture, built-in furniture, equipment, and so on. Comment on physical characteristics as to the quality, both in isolation and relevant to average neighborhood quality. So this is a point where somebody was, I think Aniket sir was referring that if it is a factory and it is not in a condition based on what was told 1 month ago, these all things will get captured over here. The legal situation, very, very important. What is the ownership and tenure, tenancies, town planning, development control? If there's any specific judgment which would have an impact, that also can get highlighted, which is part of it's a legal aspect, but which will impact the ownership, which eventually will impact the value also. Now comes the valuation methodology, right? What all methodologies are there, which approach has been taken, what is the key assumption under that methodology? Because sometimes we use different you might use income approach and market approach. And then you might say, okay, I as a valuer am going to assign 80% weight to the income approach and 20% weight to the market approach. Why? That also should come out very well. That's part of your key assumptions as a part of methodology. Selection criteria for the relevant market data. On what basis? So if you remember the example which I gave, like iron and steel manufacturing, Jindal, for example, Jindal Steel is there. A lot of other companies are there. If you tend to select a specific company, maybe as a comparable company, you have to tell what is the criteria on what basis you selected that particular company. Analysis. Gaur sir, can I request if you can put your line on mute? Gaur sir, if I can request, if you're not speaking, you can put a line on mute. Analysis of the market data. So very important, if there's any specific adjustment required, like if you are looking at a company which is much larger in scale than which you are valuing, obviously there will be some kind of adjustment you have to do. Then comes the final valuation, calculation, supporting opinion, and then the conclusion. The report must be clearly, unambiguously stated together with the confirmation that sufficient investigation has been undertaken to justify the opinion of the value reported. Confirmation of the value, date of valuation, clear statement as to whether transactions such as VAT, fees, etc. are not included in the reported value. Currency. Now,
if you just put rupees, it could be Sri Lankan rupees, it could be Pakistani rupees, it could be, so it is always a good practice to keep INR. I think it's a very basic thing, but yes, very, very important. Statement of compliance and general data protection, this related to this EVS. In our case, it will be specific RVO valuation standards or the international valuation. And then you have your basic disclaimer, the report must be signed. So I really found this format to be very good. And I will be sharing this when I'll share the presentation. So do refer this, and maybe this might help you to incorporate some of the changes in your report. So very good. Next is very quickly, I'll cover one valuation report. As Yogesh sir mentioned that ICRView has provided some samples. So very quickly, I'll just cover one sample, which I found to be relatively good. So this is a valuation report, which was done for valuation of shares, right? This is a content and it very elaborative valuation report. Introduction also, then they have put very specifically in terms of how the value was appointed, what is the scope, date, sources, and so on. Then they have given a very good information about the company which they are doing the valuation, including the customers, what is the industry outlook, what are the growth opportunities, if the initiatives by the government, then approaches, then valuation methods, and then if they have considered the DCF method, then how they have arrived at maybe like could be a working average cost of capital, how they have considered the different forecasting numbers based on the approach, then conclusion, SWOT analysis, opinion. So it's a very good report as a reference. Again, I don't say this is a benchmark, but yes, this is a good report. Now, if you see here, it's starting with a summary. It is starting with a simple one-page report. And this is a very good practice where you start with a summary and then with the detail, so that in the first page itself, you provide what is the final number. So here, if you see, they have given the value per share of ABC is around rupees 820.19, right, per share using the DCF approach and market multiple method. Then comes the introduction part. So this is your terms of reference, who was appointed. So it is also mentioned the intention. The intention was that the purchase, basically here, there was a XYZ Limited who was intended to purchase minor stake from existing shareholders to assess the value, right? So this is the intention of the report. This is a purpose and solely the use by the proposed investor. Scope of work. Again, very specifically, opinion for minority investment into the company. Value are based on historical and prospective financial data. We have arrived at the data or extent person made independent study of the industry for the purpose of making projections of the company, right? Valuation date. This is specific 31st March 2016, and it can change beyond this date. Sources of information. This is all the source of basically management. Then if they have used a website like Money Control, Bloomberg, Capitaline, Damodar Online, they have mentioned these sources also. What is the summary and recommendation of value? Again, now they have provided a summary that what is the final value which they have arrived for. Scope, limitation, assumptions, very specific. Like for example, if you see this one, which is highlighted, no material adverse change has occurred in its respective operations and financial positions from 1st April 2016 to the date thereof. So till the date the valuer is doing the valuation, from this date till the date of valuation, there is no major change which has happened. Then accuracy of the information that was publicly available and formed substantial basis of this. We have not carried out a due diligence or audit of ABC. So again, very, very important. It was publicly available. There is no due diligence carried out for that specific ABC Limited also. Then, however, nothing has come to our attention to indicate that the information provided was materially misstated, which means this shows that the RV has done some due diligence, right? Basis it, they say that there is no materially misstatement or the statements are incorrect or whatever information provided by the management is not correct. Valuation work. Then this report is its contents prepared for XYZ Limited. I think again it's ABC Limited. So there's a mistake, which is fine. Neither of us nor any of the employees associated have a financial interest in ABC or its assets. fee for the engagement is not contingent upon the results of the report. Very important statement, because again, it's a decision which the appointing authority will take based on this report, whether they want to invest or not. So it is very important statement that these fees of the engagement are not contingent upon the results of the report. Then this is a very good company overview about given the background, the products, what is the infrastructure, customers, capital structure. Then now looking at the larger picture in terms of industry, what is a brief profile of this Indian foundry industry, right? So this is very interesting. This definitely adds more perspective to when you look at the valuation, the final number, exports, import trends. Then we have growth opportunities, government initiatives. So obviously these things, if there is a growth, if there are a lot of government, for example, SME sector, eventually that will have some impact on the valuation. So it's very important to have this kind of a background given in the report. Now different approaches. So asset approach, you have your BV method, NAV method. So this I found it very interesting that if you see in this case, the RV has considered two approach. One is income and second is market. But what he has done is he has also used the cost approach, the NAV method, basically. So the statement is very clear. We have not used NAV method in our valuation since asset value reflected in the books of account do not usually include intangible assets enjoyed, are not generally a true indicator of the future distributable profit. So why NAV has not been used, number one. And also, if you look at the second, however, we have computed NAV of the company to check our valuation recommendation is less than NAV. So basically, RV is pretty sure that overall valuation cannot be what is there in the NAV as per NAV. So hence he's doing a valuation as per NAV also and giving a disclaimer also why he has done the calculation to do a comparison. So this was very interesting. Then you have income approach, PECV, DCF. Basically, it's a DCF approach. Now we have used DCF method of valuation for the purpose of valuation to arrive at the intrinsic value. We have assigned a weight of 80% to the value using DCF, which means two approaches, 80% to the income and balance 20% to this one, market approach. Now market approach, we have not used this method, which is the market price method. But if you go to market multiple, we have used market multiple methods, and the weightage of this is 20% of the listed companies comparable. And why 20%? Because are not exactly in similar line of the products. So again, you are using another approach and a method, but you are using a specific weight, but you're justifying that why the weight is only 20%. And within this specific method, you're using the EV upon EBITDA approach. Then we have market transaction method, valuation methods applied. Then valuation method, now this is how the NAV was calculated. I'll not get into specific numbers, but as mentioned above, if you see here how the NAV was arrived. Then enterprise value as per NAV is around 15,000. I think this is in lakhs. Yeah, 15,000 lakhs. Discounted cash flow method. This is the information provided for the past performance, historical information for all balance sheet, P&L, everything. What are the assumptions in terms of the future period? Then you would see this is the future projections for the next 5 years, right? So this gives a good perspective about what is the total EBITDA and all that. Then there is a graph also representing. Then the RV has calculated the FCFF also over here, or maybe the management did it. RV would have validated this, and this is a terminal value. The value is around 19,000. Let's say 20,000 lakhs. So enterprise value as per DCF is around 20,000 lakhs. Then what is the WACC working? Very, very important. How did you arrive at that? Then comparable market multiple method. Okay, so here, as I mentioned, they have taken two different companies and the source is moneycontrol.com, right? So you would see here that how they have mentioned that they have considered two companies, which is steel cast and precision casting as companies. Why they have taken that? Number one. Second is also given some background about these two companies. So this gives a very good perspective about how the valuer has evaluated these companies and what basis these companies are considered for valuation. And we used average EBITDA, average EV by EBITDA and PE multiples of these two companies to arrive at the valuation. So value as per market multiple, this is for ABC Limited. If you see here, this is your EV upon EBITDA multiple 29.4. This comes from here, 29.4. So two companies, Steelcast and IPC were considered, and then arriving at the average EV upon EBITDA, they have done the valuation for this. Also, PE method was used, and basis that two different ratios within market multiple giving 50-50% weight. So the valuation is around 62,000 EV. Then calculation of EV over here, which we discussed. And then conclusion. So enterprise value as per NAV is 15,000. Discounted is 19,000. Again, the 80% of that. And then comparable company method is 62,000. Again, this is all in lakhs. So 20% of that. So the total value is 28,000 lakhs, right? And they subtracted the debt and the cash equivalent. So I'm not getting into details of the numbers, but yes, if you see how the approach has been done, this is very nice. SWOT analysis, the strengths, weakness, opportunities, threats, all were discussed with the management and corporate over here. Then there is a disclaimer that opinions expressed herein are current opinions, are current opinions. As on the date of this report, nothing in this report constitutes investment, legal, accounting, or tax advice or any solicitation whatsoever. And it is not a recommendation to buy or sell or hold any securities. Reports should not be reproduced or redistributed or communicate directly or indirectly in any form with the person. So very specific disclaimer, what is also re-emphasizing the purpose, who can use it and for what. Indemnification, the provision shall apply even after the termination of the engagement for any reason whatsoever. Basically, if there's any mistake, I think they have mentioned here that members of valuation codes, not very relevant, but basically indemnifying the RV over here. And then the opinion again highlighting the 820 abbreviations used. So very good reference point as a report. And this is available on the ICRVO website also. It is publicly available. I'll attach this report also when I'm sharing the presentation. Any questions so far?
Sir, you mentioned about EVS.
Yeah, EVS.
So just kindly once again, if you can repeat about EVS.
EVS is basically, sir, your European valuation standards.
Yeah, okay.
So I was referring to European valuation standards where they have given a very good format for a report, and the background is land and building. So I will be sharing this when I share my presentation with Divya Jyoti. Okay. So you can refer that also.
Okay.
And this is known as a blue book, by the way. So EVS, they just call it as a blue book because I think they kept it as in blue color. So here I have just extracted the report format part, but this overall is a 500-page standard which talks about everything from a valuation perspective for land and building. So this is a very interesting reference. I'll share this.
I was trying to download this book while we were discussing. It's not, the website is not reachable. So if it's possible for you to share the book, that will be.
Sure. I'll share the book instead. Yeah, that'll be better.
Thank you.
I'll definitely share that. Yeah. Anybody, any other questions? Anybody wants to add anything?
Sir, comparison method weightage is not considered at all.
No, comparison method weightage is considered, right?
So marketing method weightage is considered about 20%.
Yeah.
20%. And 80% DCF method. So comparison method should we consider?
The market comparable is 20%.
Yes.
Competitors.
So here, I think your question is, you are asking what method we should. So this will again depend on case-to-case basis. But here the point which I was trying to convey is that if you're using two different methods, you should very importantly justify why. Now, for example, if they use comparable market multiple method, so the RV justified that which two companies which are comparable he has considered, number one. Second, he has taken only 20% weight. He has justified why he has taken 20% because they are not an exact match of that company for which he is doing the valuation, right? And within market multiple also method, he used two different matrix, which is the P and EV upon EBITDA. So that also he took 50%. So that also he has justified. Does that answer your question?
Yeah. Thank you.
Okay. No problem. So maybe
Sir,
if
one general question.
Sure.
I'm Naresh Gupta, Valuer Land and Building.
Sure,
Many
Naresh.
banks are asking indemnity bond from the valuer, whether it is justified, and fee is very less, about 3,000, 4,000. It is a general question.
I know,
So
sir.
what action you propose? Should we write to the bank authority or IBBI? Or on what basis they are asking the indemnity from a valuer? It is a big problem later on. It can be.
No, I really agree to your point, Gupta sir. And what I've seen is that one, as you rightly said, the fees is very meager, and on the second, they are asking for indemnity bond. I think maybe we as a valuer, again, this is my personal opinion, so it could be different, and somebody could challenge it also. So if there is one is fees part, second is I also look at. I mean, rather than having that doing that valuation, what is the risk involved? If they're asking for indemnity, if I don't see there is much risk involved, depending on case-to-case basis, I might do the valuation, but otherwise I may not consider doing the valuation. So this is my view. Maybe I'm not giving a specific answer here, but again, it's a call which we as an individual has to take. But I really don't support this part. My personal view, I don't support this part.
Can I just add here?
Sure.
This is outside the the topic of today's.
Yeah.
But this is something that is a very disturbing fact. So there was a bank which has recently asked for empanelments. And what I have done, and this is what I normally do even in my architectural practice, if I do not agree with the terms and conditions which the agency is trying to force upon a professional. So what I have done is, in my application, the indemnity bond, that clause, that appendix 6, I have printed it without that indemnity clause. I have kept the points given above, and I've removed that and signed and sent it. So if they want to reject my application, let them go ahead and reject my application. And then the appendix 8, in which they have given the fee structure, I have taken a printout of that, and I have put a note on this in my handwriting that this is not acceptable to me. It is for a professional to decide how much he will charge, and not for the agency to decide how much they will pay. And I do not agree. So I have also appended that in my application. I have made it sure that they will reject me, which is all right. But I have to tell them first what I feel about what they are trying to do. My only take here with all professionals sitting on this table, if every one of us sends a statement like that, every bank will have to change. There is no point in cribbing about no fee structure. Don't accept it.
Absolutely right, Puni sir. I really appreciate that, and thanks for sharing that. Very useful.
I would like to add one point. Prakash, may I add one point? In some meeting, somebody has suggested that we can add one clause that say our liability is limited to the fees received.
So I think Prasad sir, most of the cases I have seen now it has become a practice that the last clause towards the end, whenever we do after the conclusion, this is a point which we add. Either we put an amount, or maybe we put not amount. We put to the limit of the fees. I think that's what you're trying to say, right? My liability is only towards
limited to the fees received. And what he told and generally understood is that in case we have done any fraud, say our clause will not stand to test. So anyway, if it is fraudulent, fraud on our part, the bad intention on our part, we cannot withstand that clause. We will be liable for the full damages. Otherwise, if we are meticulously done the report or our work, then our liability is limited to the fees received only.
Yes.
That way we can save ourselves, I feel, and as suggested by.
And just sharing a very candid point, again, nothing on record, but just very candid point. So there was a discussion happening that how will you arrive at the amount of that liability, right? So if you go back to Companies Act, I think I don't remember the exact rule and the clause, but it says around minimum is 50,000 rupees. So somebody was making a joke that means the minimum fees which we should charge should be at least 50,000. So we can cover that part at least in case if the fees is there. Anyways, that was just on the lighter side. Yeah, I think somebody.
So if you are giving caveat, if I am giving caveat in my report, why should I worry about indemnity?
No, indemnity, as Puneet sir said, that I think one is you should not accept that at all without
But
indemnity.
if I am qualifying my report with caveats, why should I worry about that?
Sorry, sorry, I missed that last point. If you're
I am
qualifying a
my
report,
with caveats, limitations, I am not held liable, all that. And why should I be worried for indemnity?
I think that is a requirement if you are getting impaneled with a bank.
Yes,
so,
true. But my report is qualified.
No. It will become a conflict, right? Let's say if you have signed an indemnity bond.
Yeah.
Correct. So ultimately, maybe it can be debatable. Maybe
They will
as
not
a
accept
part.
the report. They will not accept the report. That's it.
Yeah, they could be.
Can I come in, sir?
I think Yogesh sir was trying to say. Yogesh sir, sorry, I'll come back to you, Subir sir. Yogesh sir, you were saying something?
A limited point, sir, that 50,000 penalty is in section 247 of Companies Act, sir. Now it is
sorry. 50,000 penalty is limited to?
Is in section 247 of Companies Act.
Correct. Section 247. Correct.
Actually, it is revised now. Earlier, it was the minimum 25,000.
25.
Now it is 50,000.
Correct.
Minimum.
Yes, you're right. Thanks for adding that, Yogesh sir. Yeah, Subir sir, you had some point. Oh, was it Prasad sir? I'm sorry. Somebody was trying to say something.
Hello.
Yes, I to request you, sir. Can you say something on the SWOT analysis of this profession? Because this is really a good profession as well as very risky profession as well. So can you say something about this SWOT analysis of this profession?
So, sir, I can just give you an example here. Like what happened is couple of months back, I got an assignment, okay, via some reference. And the gentleman came to me and said that he wanted to do a valuation of an intangible asset. And this intangible asset was basically a portal, right? And so we started understanding that if it is an intangible asset, what is the purpose of this valuation? He said he want to do the valuation to show in the balance sheet. Obviously, valuation report is not used to reflect in the balance sheet. And then when we digged further, we asked for the ownership of the portal. So that was also not very clear. Then we went to MCA website. We understood that this is a startup company and they have not done any compliances. So first thing what we did is we asked the person to do the compliances. And once the compliance are done, help us with the balance sheet as of 31st March 2022. Then we will look at the valuation. So this person asked us to do the compliances part. So we appointed somebody else so that it's independent. There is no conflict of interest. We ensured that. And this discussion went on for 2 to 3 weeks. We had multiple Zoom calls. He took us through the portals. And we saw that the portal had basically some kind of a SMS functionality where if a bank is launching a product, the SMS would go to all the lakhs of customers in one shot. And then there would be some kind of interaction. This portal had some political aspect also, because though I'll not mention the state here, but the chief minister of the state also had his video uploaded over there. So there were some political alliances. Plus this portal, because of the kind of gamut they had, they wanted a lot of bandwidth. They wanted a data center in place. So they had already approached BSNL. They got the quotation also for that. So some things were in place. Eventually, during our discussion, we came to know that the actual purpose of this valuation is actually to fund the money from the bank. And even discussion also went to the extent where the person is asking me that he wants a valuation of 25 crores. Now, we as a valuer, we don't do mandate valuation. We cannot give that perspective, right? So it started becoming riskier. As Chaudhary sir, you mentioned that the profession is very interesting. You get to do a variety of work, but started becoming riskier. And further discussion, and I would also just add one point here, Yogesh sir over here, who is also part of this forum, he was very helpful to me. So his guidance was very helpful. And thanks to Yogesh sir for that. And so eventually we saw that there is some kind of fishy things which is happening because this portal was developed in United States of America using a gig economy. Now this portal, they want to bring it to India, right? Now within India, there is no ownership which has been defined. If you have gone to BSNL for a quotation, it is just a quotation. If you want the quotation is for 10 crores. If you want a valuation, but ultimate objective is to go to the bank and do the funding. And this is where some of the frauds have happened. So if I take a simple example about Vijay Mallya, one of the frauds was where the Kingfisher brand was used as a valuation, and eventually one of the banks, they gave loan to him. So this is somewhere there was a risk involved, and ultimately we had an engagement letter. We had already given, the person was ready to pay the fees also. We actually called back that engagement letter. Because of the risk involved, we canceled the engagement. And this is not once, this has happened 2 to 3 times, where for another example is projections. If there was a startup, they wanted to do a valuation, the projections for the following year was going around 200%, 300%. We had a very simple question that on what basis? They didn't have the answer. So ultimately we said we will not do a valuation. Third situation where the person came to, they were looking at an M&A activity. So he came for valuation. He said, we'll give you 10,000 rupees. You do the valuation of the company. When we saw the balance sheet, it was all relatives of that particular owner, which was part of the balance sheet. They have given the loan, taken the loan. We said, we will not do the valuation. He increased the fees to 20,000. We said, we will not do the valuation. He increased the fees to 30,000. We'll say, we will not do the valuation. So my suggestion, sir, here would be that please evaluate the risk first, number one. Second, then you look at what exactly the purpose is. I hope, Chaudhary sir, I was able to give you some perspective.
But for the analysis, we are not paid off.
Thank you very much.
No problem, sir. Yeah, Suresh sir, sorry.
Hello. It happens sometimes that we submit the report, the property gets resolved, resolution takes place, but the IP is not paying us the fees. Then what is to be done? So we have to pursue continuously, go on writing, go on emailing him, calling him. What we can do?
So a very standard statement which IP will make to you is that we don't get our dues, right? So जब पैसा आएगा तब आपको दे देंगे. Very, very basic. And this has happened in one of the instances also. Despite IP agreeing that he will pay 50% in advance, he didn't pay. Another 10-20% in draft report he didn't pay. We had a call with him. He said, यार मेरे पास ही पैसा नहीं, मैं कैसे दूंगा? आप रिपोर्ट तो सबमिट करो, हम देखते हैं. आपका पैसा कहीं नहीं जाएगा. That's what he says. But one thing what I can tell you, Subirji, is that most of the cases, the money will come, but will come late. Most of the cases.
Okay.
Yeah.
Is there any authority where we can write in case?
See, if the resolution for that specific is closed, the CRP is closed, the liquidation has happened, the company has dissolved, it has been there for last 2 years to 3 years, and you have not received your money despite all these things have closed, then you can definitely use the legal approach to get your. You
Any
can
other
always,
authority, that is IBBI or
IBBI
NCLT?
is, yes, IBBI could be the best authority over here. You can raise a concern over there, definitely.
What should we write to the NCLT?
Already, NCLT.
May I come in?
Already, I heard that this is some users have gone to the NCLT for recovering their fees involving COC and.
Yeah, there is a case law also on that, sir. You're right. There is a case law also on that, where the valuer has actually approached the NCLT, and finally NCLT directed that you have to pay the fees. And this was a situation where the resolution has already happened. Maybe I'm not able to recollect the name of the case, but I'll share with you when I share the presentation. I'll try to share.
I have some issues. That's why I.
May I come in?
Yeah. Please.
I would like to intervene. Recently, one meeting was held on annual day of IBBI.
Okay.
So this issue was raised by the valuers there.
Okay.
And then IBBI said they will have a discussion paper on changing the various rules regarding CIRP and issue of payment of fees of valuers also cropped up there. So I think some changes will happen for better.
May I come in?
Great. Thank you so much, Sharma sir, for sharing that. I mean, we can see some light towards the end of the tunnel now. So that is good. I mean, doing so much of hard work.
May I come in?
Yeah, I think Asim sir and Munapil sir is trying to reach out, right?
Yeah.
Maybe Asim sir. Yeah, you.
Actually, I have maybe more than 10 assignments where I am not getting any paper. Even site is not ready. Even RP is not picking up my phone. One assignment is 2 years old, and he said he's going to NCLT and all. What should I do? Should I close the appointment? Can I close the appointment?
Sir, I think maybe this is going on a different track as far as the topic is concerned. It will depend on case-to-case basis also. So I can just give you a generic advice to you. Maybe you can have some kind of a documentary evidence if you have done the follow. Otherwise, you can say that normally what we do is if we don't get a response, we say if we don't get a response, this is what we will do. For example, if I'm going to reject the assignment, I'll say that if I don't get a response by 31st of August, I will not be continuing with this assignment and I'll term this assignment as be cancelled.
And but suppose if I keep mum because I'm waiting for the document, if it is a 3 months, 4 months, I'm not getting any response. Am I at fault?
No, if you have all the evidence to show that you have done your due diligence in terms of following up, then you're not at all fault. Okay. I don't see that as a problem. If somebody has a view, please share on that. I mean, if somebody has a different view, but so I don't think you're at fault.
If I give them a mail in due time that give me this records and this give me the location and all, if those nothing is coming up, then I can prove it. I can use that as my proof.
Absolutely. And absolutely, Asim sir, I will tell you one more thing. Part of the engagement letter, it makes it very, very clear because you always specify that you want these documents. This is information. And there is a very specific statement saying that after receiving all the information, I will be initiating my valuation exercise and then will be able to.
That is what I have used to write in my quotation only.
Correct. So if you haven't received the information, you have done the follow-up, you have the documentation in place, I don't see you being at fault at all. But you can always put a cutoff date to that. Like after 31st of August, I am not going to do any follow-up and I'll assume this assignment is cancelled. This is my suggestion. If somebody has a different view, so we can.
Only my suggestion would be in such situation,
yeah,
because it is business happening. So in place of making it too legal sometimes, you go and interact with them to tell them that we are coming, and that is a better approach. What I'm saying, that otherwise you're not talking to something like they are also giving you business. They are giving, you don't want to close it.
Puri sir, here the point is that there is no response. There are multiple follow for 3 to 4 months.
Still, I think going there because they feel that sometimes, because I understand their psychology, they feel that valuer is asking for irrelevant information. It also happens. It is not in this case. It is not in this case. Valuer is trying to circumvent. He does not know. I mean, it happens. Let me tell you, because sometimes for one information, one can always use something else or one can carry on. So it is better to go and interact also. Then put it on record that I came and met you also, but this was essentially required. Sometimes they say that, okay, we'll give you some other report. We'll give you some information. So one has to look for via media as far as business is concerned.
Very, very good suggestion.
My only concern is if I will be at fault. Suppose that one assignment is pending for 2 years, more than 2 years. And IP is saying is it is in NCLT and no, and it is even that particular seat is Bihar government company. but I'm not getting any information, nothing. So it's still pending for 2 years. So am I at a fault?
How
There
can you
is no
prove that
penalty
you're
for
not at
delay.
fault? Yeah.
There is no penalty for delay.
Yeah. Okay. I just need 1 minute. I want to take a quick bio break. So my apologies. Maybe you all can continue. Just excuse me for 1 minute, please.
As
There is no penalty for delay. Why you are worried?
you have to close at 1 o'clock. कहाँ चले गए?
Yeah, I'm back. Sorry. Yes.
Okay, my point is that I think that can be further discussed. But generally, I know the practice what I am asking. But once I'm in like taking some training, so that's why I want to ask that I go for LNB valuation, and like my client says that acre or say 2.1 acre. So how do I do that valuation? Just I understand the practice, but if you, sir, or anybody else can throw some light. And secondly, for market value also, like circle rates are there, or what all sources are there to find out market value. Quickly, if somebody can throw some light, otherwise I understand that I've been doing also. So
Maybe, yeah, Puneet sir, if you don't mind, I think we have like 3 more minutes. Okay, so I'll just quickly cover some of the very basics part of the slides, if you're okay. Then if everybody's okay, then we can continue for another 5-7 minutes after 1 o'clock, because we have to close by 1. Is it okay? Because your questions are very specific to land and building.
But very valid, but very valid questions, because for any valuation, such type of situation comes. So if I understand that you may not be able to convey, because if anybody else can convey in one sentence.
No, my point is, sir, that if you don't mind, I can just cover the slides first very quickly, 5 minutes, and then we can request to answer your question. Is that okay? Because first, let's finish the topic which we have in hand.
Okay.
And then we can look at this one. Is it okay, Puneet sir?
Okay.
Thank you. So this is more of a theoretical aspects, but I'll still very quickly cover. And I think we had a very healthy discussion, which is more important. But I thought this is also so that you can get a perspective. Here, if you see, okay, 1 second. Yeah. So here, very important points I'll just quickly cover in terms of definition, right? So it's a comprehensive communication of valuers' professional judgment. Remember that. Document detailing the scope, key assumptions, valuation methods, conclusion. It's a professional opinion, right? A recognized basis or basis of valuation also should be highlighted. You have to support that on what basis you're taking the approach or method within that approach, right? Which valuation standards we are using. Then we have to cover from a characteristics perspective, we have to cover all these points, that it should be relevant, it should be understandability, because again, the intended user of the report should be able to derive value from this, right? It should be relevant from them. Then the prudence part is very important. If you're using any kind of judgment, any assumption, you should be specific about it. Faithful representation, very straightforward, error-free, neutrality, completeness, reliability. If you're using any third-party information, and all the numbers, if you're reporting, or even if you're taken from management, there should be a management representation covering that they are the owners of the numbers, but you have done some due diligence. There are no errors in that number, because it might become a GIGO then, garbage in, garbage out. So eventually it'll impact the value also. And I've seen these things happening. The moment we discuss the draft report, automatically management realize, oh, this projection was wrong. So the projection is corrected, and then eventually the value per share changes. Valuation report requirements. So again, we have discussed this. I'll not get into details, but specifically as per Rule 8, these are the minimum requirements. So whenever you're doing a valuation report, please ensure that you have these 12 specific. Hello.
तो चलो पहुंचो, एड्रेस मैंने दिया हुआ है उसको जिंदल साहब.
Gaur sir, can I request if you can put your line on mute? Okay, so please always ensure that you have these 12 points to the minimum being covered. You can add more, but this is the minimum. Similarly, if you look at international valuation standards, again, the same 12 points, maybe the pattern, the wordings might be different, but same. So very, very important. And for this CLD, which is caveat limitation disclaimer, there is a guidance provided by IBBI. So you can always refer that. I'll try to see if I can share this along with the report. Then limiting conditions, I think we have discussed in detail. So, but this is some kind of a sample which we discuss when we are looking at the first report, that how should you put those caveats, limitations, and assumptions. So you can refer this also. Then quickly, valuation review report. So there, as we all know, that there are 3 types of assignments. One is could be like a more of a calculation. Second could be a detailed report, and third could be where you're doing a review of a valuation. So for a valuation review reports, I've just put up one slide that what all things you should need to look into it, because this is where the report is a result of a valuation review, right? So you should always convey what is the scope of your review, because now you're reviewing a valuer's work, right? So the scope is very, very important. Then while the review, what were the inputs, assumptions upon which the valuation was based? So this maybe you might need more information from the valuer who has done the actual valuation, but this also part has to be, should come out very clearly in your review report. Then reviewer's conclusions about the work under review, including supported reasons. Date of the report, obviously this will be different from the evaluation date. So this is one, I don't have any practical experience in this, but yes, this is something which may come to you. Then this is annexure. You can just refer it at leisure. What is some points for good valuation report? What is the content as per IVS? So this is more of a reference point. Yeah. So I think I've covered the slides. Maybe we can go back, and Puneet sir had a question. So if anybody wants to take an initiative and answer to the Puneet sir's question, and if it is okay to continue for next 5-7 minutes, I hope so.
See, kindly, yeah, if somebody is answering is very good. I understand the practice, but this is important that when we go to the site, so it is for knowledge of others also. This is the practice, and what is the solution to that? What is the general accepted solution? I just wanted to. That's why I asked. Though we have been doing it, that when you go, what do you do? And about market rates. So quickly, if somebody can say, otherwise it's okay for me. But this is important. I repeat the point for beginners.
Yeah, I understand. So maybe I think I have a very generic view, which I've covered most of it in the presentation. I'll not do the report. This is more specific question to land and building.
Correct. That's why I'm saying that you
correct. So if anybody is, yeah, it'll be great to share.
Sir, we can refer the websites. There will be websites showing the details of a property for sale, and it may not be correct exactly the position, but it may be somewhere near. But in practice, the seller will be asking for higher price, and it will be the asking price and not the market price. And we can judge based on our own experience. We can give 80% or 70% as the market value.
Okay, and about that that area, say 2.1 acres, then how do we ensure that whatever is being
we will try to find a similar property, because there will be so many advertisements. We can get it. Definitely there will be.
For rates is okay, because it may not be very correct, because you know what happens at websites, repeatedly people keep posting. I understand, but
that is our judgment.
There is a procedure of circle rates also. So okay, but now my next question is that I've understood what you are trying to convey. But about the area, say 2.1 acre. So how do we ensure that that area is 2.1 acre?
2.1 acre means you have to get the report from the village authorities, village administration office, BAO. We can get the certificate, possession certificate, or whatever name it's called. At every place there will be a certificate from the village administrative authorities.
Puneet sir, I would like to add over here.
Yeah.
In case of area, it's always better to have the revenue department certified and demarcation at that moment stating the 2.1 acre, or if both are not available, then you can always have a DGPS survey of the land which states the area, and you can claim the extent of the site using that.
Yeah, because problem comes that
2.1 acre is practically impossible to measure. I understand your problem.
Yeah, you understood my point, because sometimes,
and you cannot measure it by Google Maps also, or any.
Correct.
And even if you have the
they start troubling you.
They start troubling you, and even if you have the revenue service officer's map of a also, then it can be that it, as on that date it was there, but today it has been encroached.
Correct. You're getting the point. This is a very peculiar problem. And then client starts quoting that they know that that area is not 2.1.
And one more thing is, they actually do not show us the whole 2.1 acre. Also, there's sir, it's swampy, it's marshy, it's inaccessible. So there are all kinds of shitty excuses.
Correct.
What I have found a way is give me the as on date revenue revenue or tehsildar or village officer certificate and a demarcation showing that it is 2.1 acres and certifying that it is 2.1 acres. Furthermore, I need a DGPS survey of the area. Only then I'll value this extent. And
actually,
in the report that banks or financial institution or whoever is the intended recipient of the report has to verify the land area.
But yeah, I got the point. Generally, I've been doing that only, but they start troubling you. They start saying that you understand that point also. They start troubling you.
Before the assignment,
you are asking us, you are our valuer. You have to come back and tell us. You have to give with evidence.
So that is what, in case it is a bank, I when I check the documents, I have a conversation with, do have a very tele conversation with them, and I completely state that this is my responsibility.
Yeah.
If certify, I cannot, it's practically impossible for me to do. So
correct.
Write those documents to me.
Yeah.
It happened to me in a recent document. It was a 10 acre land. I asked them to do all these things, wherein there were two parties involved. They were sister concerns, and then they were saying that this land belongs to us. And what documents I got, I was confused that how this land belongs to you, how this land belongs to them. So I asked them to give me a declaration and all those things, and certifying that based on this, I am giving you the report. And if this is false, my report is null and void. This is a clear limitation.
Correct. Same thing. Generally, we have to practice the same thing. But I wanted to get the that vetting done. That whatever I'm thinking on the way I'm doing. Thanks.
No, it's absolutely correct because these are very crooked bankers.
Correct.
Actually, assessing the quantum of land is not valuer's duty. Because
that's why I threw this question, that just to
actually
in this August gathering, just to know the views of others. So
whenever you go
to the point is
it is factors of land.
Exactly.
So you can't measure. That's why you should, whenever we quote, we just mention there that surveying is not our duty. Surveying and assessing of the quantity or quantum of land is not our duty. It should be done by a
Sir, if I would like to add, Subir sir, to your point, exactly that is the point being mentioned in our reports. Banks, it's general practice that banks consider
Can we
valuers
ask
as the
the
scapegoat.
client to get one service report? Hello.
For all the
Can we
things
ask the client to get a
Prasad
service
sir.
report?
for everything.
Yeah, maybe just
Party goes
maybe
wrong,
Aniket.
valuer is wrong. So this is what practical implications of the problem are.
Okay, great. So I am really thankful to all of you. I hope Puneet sir's query has been resolved, and thank you so much, Aniket ji. So I hope this session I was able to do some justice. And if you have any feedback which I can do better, you're absolutely feel free to share that. Once again, I'll thank you, Divyajyoti Foundation, for organizing the session and giving me this opportunity. And thanks to all of you for keeping it so live, so interactive. If there are any questions, we can continue maybe for another 2-3 minutes.
Kindly share the format.
Yeah, I'll definitely share that blue book and the presentation also.
And CLD also, IBBI, CLD.
CLD, correct.
CLD.
Yeah. So I owe you all 3 things. Perfect.
Yeah.
Okay, great.
Okay, thank you, sir.
Thank you.
Anybody else with any last question? Or we are great. Thank you so much, everyone. Once again, a very happy Independence Day.
Thank you
Enjoy
very
your
much,
Sunday.
Thank you. Thank you very much.
Thank you, Prakash.
Bye.
so
Bye.
much.
Thank you. Thank you. Bye.
Thank you.
Just a few minutes. Thank you, sir.
Yeah,
We
Sharma sir.
we
Yeah.
have come to the end of this CEP. It was a special session, which was a part of our celebration of Independence Day. And thank you very much, sir, Kukreja sir, for covering this topic comprehensively. I hope that all participants would have added to their knowledge and would have benefited from this. And thank you, participants, and thank you, Madam Sarita and Urvashi. And happy Independence Day to everyone.
Thank
very
you,
much.
Sharma sir. Thank you so much. Thank you. Thanks to everyone.
Thank you so much.
Thank you and bye-bye.
Thank you.